Ni hao ma. Sorry, I had to heat up my coffee. I'm a little late. One thing that's nice about having 2.5 kitchens in your house is you're not far from a microwave. All right, you guys ready to go? Thank you, Denise. I did do that. All right. Good morning, everybody. Comment allez-vous? How are you? I hope you are having a wonderful day. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance to lower our risk and increase our consistency. Because when you have control, then you have consistency. With consistency, you have confidence. Yeah, that's right out of my book, I think, first chapter. Oh, it's hot. So anyways, hey, why would we do all that? Well, because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne. I'm a currency trader just like you. Before that, I was a venture capitalist. Before that, I was a high-tech entrepreneur. Before that, I worked at a little rocket company called NASA. You might have heard of it. Yep. Oh, I forgot my nonprofit world experience. So anyway, so that's that. That's all I've done. But I've learned a thing or two about Forex, having done it for almost exactly 20 years. I think I started professionally in 2004. So I guess, yeah, getting pretty close anyways. Definitely been messing around with Forex longer than 20 years. So you know what? I found 10,000 things that didn't work, and I'm willing to share those with you. And then once you understand what doesn't work, I'll show you the few things that seem to work. And you can try to incorporate those strategies and techniques into what you do so beautifully. And then together, we will be a shining light in a world of darkness. You can also ask questions. That will help. I don't expect to keep this webinar long today, but there's no reason not to either. I've been neutral in the market since Sunday night because of the event today. Yeah, special event. I'm going to do an event today, and as soon as we start, the markets are going to go crazy because of my special event. Did I create a link? I did. I dude. Let me get that link for you. I think I actually already have it copied. Let me see what happens. Paste as, yeah. There she be. Yeah, so we'll move the market together as a community. It will have nothing to do with the Fed. It'll have everything to do with us. That's how powerful we are. So anywho, let's get on with it. If you look in the description below the video, there's a link to my book. I'd like you to leave a review. I don't care if you buy it or not. Wayne, should I buy it used? Should I buy the Kindle version? Should I buy a new version? Yeah, whatever. Remember, I essentially don't make any money on if you buy the book or not. So it don't matter none. Cool. Because remember, I only wrote the book, and then you sell the manuscript to a publisher, so it's a publisher's book. But what I would like is some feedback. Let me know that you care, and leave a review. That'd be great. There's a description to Quant Box, your macroeconomic quant in a box. Yep. I'll give you a little sneak peek of what it looks like right now. But the link, I think, might be in the description below. I'm not sure. There's a link to FX Bootcamp, a community of foreign exchange traders that are kicking ass. Hey, but, you know, the entrance fee is really high. It's $88 a year. Whoa, dude. Okay. Right? And then tradersway.com. You're a trader. You're going to need someone to execute your trades. Pretty simple. They need to have staff, right? They have to have servers. They have to have licenses to the platforms. And then they need to secure liquidity providers. And for that, it'll cost you like what? A pip? A pip to trade euro dollar? Half a pip? I've seen it free a few times. But anyways, or you choose an ECN, whatever you want. Whether it's hard dollars or soft dollars, it's your choice. The thing is, Traders Way earn my loyalty and respect with their behavior in the actual market. Not through a banner ad or some weird promise or, hey, we're the cheapest. Look at me, dude. I don't want the cheapest. I want the best. So anyways, Traders Way has earned my loyalty and respect. I recommend them, and I hope you check them out. See if they can earn your loyalty and respect. So tradersway.com. G'day, Adam. How are ya? How's your mum? All right, I want to show you QuantBox quickly because things have changed a little bit. Some of you came to my special event last week, so that's why I just want to show you. In that special event, I outlined some free bonuses. One of the free bonuses was the macroeconomics course, which is now added and unlocked for everybody. Look, I can't even fit them on one page. Okay, 13 lectures, and they're at least an hour each. Okay? And they're good. I'm telling you, they're good. Like this is college level material. I'm not even joking. University quality. Like, for example, there's no guru on YouTube that has a course that outlines the solo growth model. I mean, nobody.
All right, record on this computer. Awesome. Hey, welcome to everybody. First or second lecture, we were saying, hey, GDP is really important. And then there are others that are catching up, right? And that's a different output. Okay? All right, so for example, there's a baker. He bakes it. Oh, everything changes, right? Accountants here, huh? Well, capital is an asset. A tractor is an asset, capital. A skyscraper is an asset, it's capital. A computer, right? Cost, well, cost is cost.
Okay, anyways. Beautiful stuff.
We get,
hang on.
Okay, the two lines. Output, you know. Y is equal to. Now here's a pop quiz. What is Y? Output. Why is it Y? I don't know why, but it's Y. Okay? Output, what's another word for output?
Productivity, huh?
Okay. So what we're looking at is this level right here. And by the way, can you imagine a professor doing this on a chalkboard? Yeah, oh, for sure. Okay. So we're talking about this distance here, from the bottom to the green, right, to that crossover there. We're talking here to here. Okay, that's the level of investment that you're going to make. And then this should be this distance from investment to output. okay, is what we're going to get to. Okay? Think of it like you produced, if this was in dollar terms, 100 million, you have to invest 30 million to get the 100 million. Okay? All right. I'm going to turn my drawing tool off here. And by the way, when I said the professor doing this on a chalkboard,
So anyways, yeah, well, it's detailed. What can I tell you? It's detailed. What can I tell you? So anyways, so I added that. Everyone now has access to that. The second thing is we are in the process of building the live strategy sessions to be added inside a Quant box. So for example, when you log in, here's today's video for the strategy session. Today's strategy session, Wednesday, March 22nd. So when you log in, it's like right there. There's the most recent video, right?
May I box is your globe added to your trading? It'll make a massive difference for any market open. But right now, we're going to use the score chart summary. The score chart summary shows you all your pairs and shows you their signal.
Cool.
The Fed lately, I know that they're concerned about increasing too quickly.
And see, we take what's on QuantBox and then translate that into a potential trade plan on the charts. So anyways, and then the last I want to hit on this, the QuantBox training course, a lot of people asked for this. It's now done. I'll give you an example of what one looks like. Cool, right? The next part of the tour is going to cover Smart Money Tracker. Now, all this is a graphical representation of the Commitment of Traders report. Now, if you've ever downloaded the Excel file, euro, oil, key, and this is assets that tend to do well during risk on period. Okay, this is showing you the change. So this is how many contracts have been added to Aussie dollar long this week versus the week before. So it's not the total number, it's the change over time. And then here's institutional investors. So that might give you a heads up of maybe what you should be looking at, not just today, but into the medium and longer term, because institutional. Cool. And then you can just click next, goes on to the next one. Beautiful. So anyways, I made some big promises in that presentation I did last week, and now we have delivered. Okay. Cool. Cool. So anyways, just an update on that. Coolio. And then I guess I got to get to this. Let me show you that. I am hosting for all members of FX Bootcamp. Every membership level of FX Bootcamp is welcome to attend. Just update it and get the link for you. And we will do FOMC live, so 1:45. Make sure you log in. Remember, there's a time difference right now between Europe and the United States, and the server for sending out the reminder emails is on, I think, the European server. So very often you get things an hour off right now. But of course, when Europe changes its time, which maybe it just did Europe just do it? I think so, right? It's spring now. We've gone through equinox. So maybe it works again. I don't know. But at least there was an issue where people are getting reminders an hour late because it thinks it's one time versus the other time. Yeah, silly programmers, huh? Forgot to do that. Oh, so it's coming up. So anyways, don't rely on getting the reminder on time. But make sure you come to the page. Click that click your RSVP. So look, I am attending, and everybody is welcome. All members of FX Bootcamp are welcome. Video only, swing only, day trading only. Okay. So anyway, so we got another busy day. There was 2 sessions yesterday. I think I don't want to go 2 sessions today. So I think what I'll do is we'll probably end up skipping the day trading and handle everything within that special event. I think it makes sense. All right. So let us get going. Thank you for all your patience for going through all of those announcements. But sometimes you gotta do some housekeeping, huh? All right. So let's see. Dollar still weak. Yen giving some back. Swissy weak. Kiwi weak. Aussie weak. CAD weak. Euro strong. Pound strong. Now the pound has, well, first of all, we have an FOMC, we have a Bank of England meeting tomorrow, right? And guess what? They have red hot inflation. I'm turning hot like fire. No, I'm smoking hot like fire. When I turn, you desire. And I'm fresh in you because you white. So anyways, pound is red hot because, what was it? 10 point something. Holy smokes. That's right. So their Bank of England is going to be forced to raise interest rates into a slowing economy. 10.4, it's crazy. Well, you know what? I don't know. I guess I'll make an off comment here, and I'll probably already regret it. But the UK is turning more socialist than it has been in many years, and one of the outcomes of that choice is persistent inflation. And usually and eventually high unemployment. Right, France? Huh? Right, France? So anyways, hey, whatever. The Brits will figure it out. I have a lot of respect for the British. So they'll figure it out. Or pay the consequence. Screwing it up. Anywho. Yeah. So that's that. So Bank of England, holy smokes. But that euro's red hot. Red hot. And if I have one open, I do have one open. This is QuantBox Lite. And as you can see, for quite some time, we've already known that money is flowing into the euro by institutional investors. It's the number one thing institutional investors are buying right now. Okay, look, 80, it's not quite 80%, it's pretty close. Okay? 80% of institutional investors are long euro. And what does that translate into? It's the only thing that's strong. Is that right, Robin? Sweden's got 12%. Wow, that's cray, man. Huh. Yeah, well, I don't know much about what the bank and the government's been doing, what kind of policies they have. I should pay more attention to Sweden. I have some great memories of Sweden. But as far as their policies, it's strange actually. Now I'm like, how come I don't know more about it? Interesting. Amazing. Wow. That's really alarming. How do you see? You get to a point where you know, it's like the event horizon. you get to a point that no matter what you do, you can't get back to where you were. And I'm wondering, when you're hitting 12%, can you get back? So like if this is the sun and there's a spaceship, okay, a little rocket, boop, 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 boop. I'll make it like a UFO. Bloop, 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 bloop. Okay, and it's going this way towards the sun. And the sun has gravity pulling you towards here. You have to think about the thrusters. How much energy can the spaceship produce to go this way? And there's a point called the event horizon where even if, so like the spaceship could turn around here and it'll struggle and it'll have to go full bore, but it could avoid crashing into the sun. It can do that. But if you cross that line and the spaceship's here, no matter what the spaceship does, it's irrelevant. The spaceship's going to land in the sun. It's going to perish. It cannot. It's physically impossible. When you look at how much thrust it has versus the gravity of the sun, right? So I'm wondering, like, when it comes to the economy, Sweden at 12. Whoa. Whatever policies and practices are in place to create the inflation, it's probably at the point where it's almost impossible to reverse it. You'd have to change everything, change the government leaders, change the central banking leaders, change the policy completely. But that's difficult because there may be some cultural biasness inside of the policies. And wow, dude, 12. That's cray. Yeah, I suppose if it's just energy related, yeah, okay. You'd rather die than use energy from Norway. I get that. Yeah. One thing I learned when I was in that part of the world is the Finns hate the Swedes hate the Norwegians, and the Norwegians don't give a damn. Yeah. But if you want to party, find somebody from Denmark. Holy crap. I never forget waking up with bull horns on my head. I'm like, what the hell happened last night? Oh, the Danes. Ugh, I think I remember now. The Danes. Gee whiz. Well, at least I got bull horns. All right, let's take a look at, should we start here? Nah, no, let's go back. Let's do the stock markets. Okay, let's, what template do you want to use here? Price action or just the standard? Nah, let's just do daily confluence. Boo, boo, boo. How about hourly? Okay. Okay, big change here. So you want to use that as a projection, if you will. This is a role reversal. And there's two ways to play this depending on what ends up happening. But there's a plan A and a plan B. If you're a bull, you buy at support. So we'll see what happens. Of course, you could be a bear on this and say tomorrow the UK is going to jack up interest rates and probably have to continue. And maybe that's bad. Maybe that's bad, huh? In that case, you would wait for a 21.55 cross down. So, of course, the way that I teach you how to trade, there's a lot of components to it, but a basic one is this is an important moment in time. And in fact, I can show you a PowerPoint slide of a chart from 2005 or 2006 where I'm at conferences teaching people, and you'll see the same chart. It's amazing. And you see that moment, which leads to down, 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 up, up, sell, down, 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 up, sell, down, up, out. Next wave, down, down, buy, up, down, down, buy, up, down, down, buy, up, down, down, buy. Okay. And at some point, it'll go down, 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 up, sell. We call that price action. Lufle till you mum. Okay? And if you like price action, I love price action. Okay? Pick your time frame that you like, and you'll see it's the same. Okay? See right here? According to this template, the market just turned bullish. It was bearish, you see. But now it's bullish. So, buy the dip. Up, buy the dip. And you're hoping it'll go here. But you know, every trend fails eventually, right? So could it do this? Yeah, you're always vulnerable to that. That's why you look at higher time frames. That's why you look at pivot points. That's why you look at psych levels. That's why you look at fundamentals, so that you know which one to take profit on quickly and which one to hold them. Remember, I think the most powerful benefit of Quant Box is that you know which trades to let run. So you can be long-term short, but right now you're buying because you're short-term long. And you know the difference. Know when to hold them. Know when to fold them. Huh? Yeah. Not bad, right? It's hard to do these straight. You can do it better. It's just hard to do it with your mouse. La 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 la. Wait, I screwed that up somewhere. Oh, I know where I screwed that up. There we go. A cube with a cube taken out of the cube. Anywho. Yep, not enough sleep. I get it. It happens. Okay, now let's check this out. This is the Australian stock market, in which we've been bears for a while. And I have outlined to you that this is an exit zone. And we have potentially an inverse head and shoulders. Now, we don't know if it's going to reverse or we're just waiting for the Fed meeting. But nonetheless, weeks ago, we knew that this is the exit price and the best you could possibly hope for. Okay? Is this number right here. And after that, you're just being ridiculously hopeful. Hope's not a strategy. Huh? Good engineering drawing. Yeah. That's the benefit of a good Canadian public education. Wood shop. Huh? 6th grade wood shop. Yeah. I don't know if they do that in high schools anymore. Hey, let's get all the kids and put them near belt sanders and bandsaws. Can you imagine? I mean, dude, your teachers are not allowed to ridicule you and hit you. Oh, mine did when I was in school. And I remember multiple times going to the principal's office. And she had a strap, a big leather, not even a belt. It was thicker than that. It was like 3 leather belts glued together. I don't even know what that was. And patented leather, too. Not supple Italian leather. Yeah, and whip you on your hand, right? But then they're like, yeah, let the kids play with the bandsaw. What's the worst could happen? Huh? What's the worst could happen? You give a bunch of idiot children access to a bandsaw. Like, really? Oh my God! I couldn't be that teacher. I'd be. Seriously, a bunch of 7th graders, one teacher, and there's 30 kids. There's no way one adult can oversee 30 kids with bandsaws, and oh my God, I'm surprised people didn't cut their hands off, right? Yeah, but it's just amazing, though, in today's world, right? But anyways, one of the things you had to do was you had to learn how to draw your blueprints before you started going out there and cutting the wood. But anyhow, so thank you, Canada. S&P just ripping. Remember, there's a lot of assumptions built into that. Yeah, wood shop and metal shop. I forget what they called the one where you did electronics and you built your own circuit boards and stuff like that. It's pretty good if you're thinking about it. Like, For a public school education, you're like, really? I also did, again, what do they call it? Mechanics. I think it was about 11th grade, maybe 12th grade. 11th grade. It was 11th grade where I took apart a V6 engine and put it back together. And took apart a transmission and put it back together. Like I rebuilt a V6. Pulled the whole thing apart, every single part. Yeah, auto shop. Man, it was a cool education. Anyways, so looking at this, I'm watching S&P 500 going on. Again, there's a lot baked into this based on a potential change at the Fed today, which may or may not happen. But it is legit. And notice, you are using the right tools. I'm teaching you the right techniques. Look where the S&P 500 reversed. Okay. Monday is looking for a swing trade on a 15-minute chart. Well, that's just a tactical entry if you're on a 15-minute chart. So if you're on a 15-minute chart looking for a swing trade, then you already have the swing trade. Okay. Yeah, well, one of my favorite things, Jim, is listening to the radio and then translating the words to my wife. I turned it down. Did you hear what she just said? She's like, no, what? I can take it and but my ain't free. So, but are you dumb? Of course, you have to take the blanks out. And she's like, I guess crude is good for both men and women now. Okay. But anyways, let's go play around with this pound yen. Sure, let's take a look. But once again, if you tell me you got a swing trade on the pound yen and you're on a 15-minute chart, well, you've already, it's kind of already done. You know what I mean? So like, look at this. So here's pound yen. It's obviously done for the day. Okay. Okay. So what's the swing trade? Well, let's answer that. Okay. The swing trade for this week is buy at 159.5. Okay. Higher high, higher low. Or buy at 161.00. And the target is, it's still way up there, 165. Okay. Okay. So this is your first option. Your second option. Okay. And the target is here. So going back to your question, let me find it back. Do you mind checking the pound yen for swing trades on the 15? So like, I don't know what you would want me to do this late in the process. That's why I don't understand. Now, if we didn't have a Fed meeting in a few hours, the standard operating procedure is this for tomorrow, but that's a day trade. So if you're not in at 161 or 159 and a half or 160 or something like that, then like for example, you can argue plan A is too aggressive, and I get that. So you're probably in at 161. No, sorry, 160. Okay, you're either in around 160 or you're in at 161. And if you're doing something different, it's not a swing trade. Okay, Monday? Well, look, we know we're done for the day, right? So now you're setting up tomorrow's trade, but can you set up tomorrow's trade in front of a Fed meeting? No. So what I recommended to boot campers earlier in the week is by now you would have this jammed at break even, or you'd have this jammed at break even. And now you hope today's event takes you up here. And if so, you get paid. And if today's event brings us down here, then you've lost nothing. But this is people getting out for the today. It's obvious profit taking. But that's a day trade. So today's day trade, okay, is buy here in Asia and exit here. Pretty simple. Okay. And technically speaking, this is tomorrow's trade, so you'd look for a pullback, but you got so much event risk that you wouldn't just trade this like a regular old trade, or maybe you would, but I wouldn't recommend that. Okay? Yeah. But if you can't be in the trade for 3 or 4 days, then it ain't a swing trade. Okay? So has everyone signed up for today's event? Let me check. In a little while. No, come on. There's only 9 people. What are you doing? Okay. How do you sign up? Click the link I just posted. Yeah, never mind. Yeah, let's go. All you have to do is right here, RSVP, bro. Okay. Come on, let's go. Sign up for the FOMC. Free, free, free. Cool. Cool. Cool beans. Cool beans, brah. Anyway, so yeah, that's that. Once again, what I've taught you is this is where you take profit and walk away. Okay. Once again, this is where I've taught you to take profit and walk away. This one's scary because even though it's gone, I mean, it's not scary. I guess it kind of proves the point. Let's say you got out here for profit, as expected. Well, you missed this big pullback, which is good. You missed that big drop, which was so unbelievably quick. But you might have made money on that. But then it came all the way back. And then it went all the way back down. And then it's come all the way back. Look at that volatility. Okay? Meanwhile, you basically got the average price. But you skipped the volatility. And volatility is bad. So skipping it is pretty good. You see? Okay, not far from the mean price. Cool. Anyways. Neato, huh? So, one of the benefits, too, of being out of a trade when you're supposed to is now you're liberated to go find a new trade. Instead of staring at that one for the extra week, you could have found something better to do or just found the ability to do nothing. Okay? Once again, the methods I teach you tell you to exit here and expect a pullback, and it did. You're welcome. Anywho, take a look at gold, oil, and Bitcoin. Okay. Little scary here, I think, because this is the conservative target. This is the aggressive target. And we are out of control here. The next move up is this 29,100. And that's a serious level of resistance. So if there is a move, like if we were doing this technically, you would think, like this. But here's the thing. This is a fundamental move. By the way, here's the projected low for the month. This is a fundamental move based on a perceived change in policy at the Fed. So if the Fed delivers that today, this can go a lot higher. It's not technical. You have to separate technical analysis from fundamental. Cool. Okay, here's my line in the sand I drew when we were down here. I marked that as the projected top, and, well, it's been the top. Coolio. And now waiting our turn. Again, if the Fed delivers a change in policy of dovishness, then we'll probably see a move like this. Easy peasy lemon squeezy. If that means we're not going to go into recession, we got this going. Remember this morning, in an hour or so, we have our EIA. Huh? It's still bearish technically, NCOT wise, and season, but seasonality is starting to kick in. You see a leading indicator? Okay. Seasonality is starting to kick in. Okay. Especially by April. You see the April to May period, all-time average 2.29, last 5 years 3.21. So QuantBox is already looking at that as everything is technically still down, for example, and lots of things are down, 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 but things are about to change. So it was projecting down. Remember, this is using daily charts, but it's also looking ahead. So if you go out here, okay, still bearish. And I think this is set to 55, actually. No, that's 21. So on this chart, this is still very bearish. Technically speaking, still very bearish. But what QuantBox knows is that over the last 20 years and over the last 5 years, somewhere around April, okay, and this is April, okay, over the last 5 years and after the last 20 years, you tend to see a move that looks more like this. Huh? Good to know, right? Past performance does not predict future results, but over the last 20 years and over the last 5 years, that's what has happened. Again, it doesn't predict future results. That's just what has happened. Huh? And now we've had 1, 2, 3, 4, 5 days without a lower low. And you're like, hey, 5 days without a lower low, and I think maybe this market could potentially turn bullish again. It would impact your strategy, wouldn't it? If you thought a trough was coming? What do you think? Okay, so let's go back to the March-April period of last year. Oil went from looks like about $100. A little bit less than that. 97 bucks, 97 bucks. And we went to 124. Remember, using QuantBox, you would have already had that in your analysis. You wouldn't have been shocked that it happened because you're like, well, over the last 20 years and every 5 years, that tends to be what happens. Maybe it's cyclical. Maybe it's refineries buying raw crude oil to make gasoline to build their gasoline and diesel supplies for summer driving. Right, Maida? Maybe that's what's going on. Okay. Okay, so we have inventories coming out later today. It's not out till 10:30. Don't you stink? You might find this interesting. The EIA expects Brent, which is international oil, not WTI, which is American oil. Okay, they expect this year Brent to go to 83. Interesting, huh? See, look at this. America's doing really well at producing oil. Holy smokes. This is interesting. I looked at doing this in the Caribbean. Wonder if I can get back to doing that. Too many projects. Anyways, so we got the big oh, there it is. That's what I'm interested in. We got the big report coming out at 10:30. But you want to look at inventories. Yeah, I'm not gonna be able to find this while I'm doing this stuff. Probably find it here. There it is. So you want to watch these supply levels closely. Okay. So we're back into the normal range. Yeah, Brent says, hey, Brent's at 75. I know. So the government, the U.S. government predicts it'll go up another $10. Do you think professionals pay attention to that? Yeah, probably. Yesterday's API shows an increase in stock. Yeah. But the thing is, it's normal. We're still in the normal level of stock. Monday says, is scaling out of a trade mathematically a sound play? I don't scale out of trades. If you think you should get out, you should get out. If you're like, well, I really believe this market's going to fall and I'm long, so I'm going to get out of some of my position and then see what happens. Like, why? Can't you make a decision? Now, I'm being facetious and I'm really poking, but I'm trying to get a point across. If you think it's going to collapse, then make a decision. You might as well max out your profit if risk is increased. Why would you want to stay in a trade when the risk is increased? Well, maybe it'll go higher. Well, that's not analysis. So I've always considered that a weak play. Now, scaling into a position makes sense, but scaling out doesn't make sense to me. Never has. Good job, Revelations. That's good. That's what you should be doing on a day like this. So anyways, I'm exhausted. It's one of those days, eh, Brew? Well, let's pull the plug. It's going to be a long day. We have that special event coming up today. Please, if you're a member of FX Bootcamp, it's totally free. If you're not a member of FX Bootcamp, pay the $88, come to today's event, and then spend 88 hours going through hardcore video training. You will not be disappointed. Okay? You are going to get 10 times the value. So come to today's event, pay the $88. But if you're already a member of FX Bootcamp, I will see you there. Log in just before 2. I think it'll, if you RSVP, I think when I hit start, it'll send you an email. So I might even start it even a bit earlier to make sure you get in there. Make sure you get your reminders. So thank you for being part of my team. I appreciate you and the hard work you put into learning Forex. It's a tough gig, man. But it's worth it. Peace on earth. May the pips be with you. May our profits be above average.